Hello, everyone. Welcome to Arbitrage Trade. I am Royce Wells, and it is February the 18th, 2024. The title of today's seminar is Bears Snitch, Bulls Twitch. And today we're talking about a few things in the stock market, US stock market, foreign exchange, and cryptocurrency. So first, let's talk about those bear snitches. Looking at this, we're on our monthly time frame, and we see dollar signs for the S&P 500. Looking at those dollar signs, what they mean is basically we should be taking profit because every time the bears snitch, there's almost a correction. Likewise, when the bulls snitch, basically it's like, hey, we're about to turn, and it lets us know it's going to be going the other direction. So right now on the S&P 500 for SPY, that ETF, we see that basically we have a dollar sign right there. And basically it's calling a top, and it being the market and it being the time frame. So looking at our 1 minute, 5 minute, 15 minute, 30 minute, 1 hour, 2 hour, and 4 hour time frame, all these guys are saying, hey, the top on this market is somewhere near about 506, 507, and if we're really, really lucky, about 510. The bad thing is basically for the buy trend to continue on in our system, that means these candles have to go back and visit really, really ugly numbers. So let's talk about the first set of numbers. Basically, the buy is in danger on our arbitrage band. So let me go there and make this our primary view so we can see what's going on here. So basically, it's saying that we have to get back down to somewhere near around 420, 421 for the buy to continue on. We saw this happen last time, and last time it was able to, the candles were, once it did snitch on itself, it went all the way down to our RSI line, and the compass line, that being our blue line, was able to cross under at October 31st, but then right at November 1st, pull up hard and say, nope, just kidding. So if we can basically, once we see these dollar signs, if the market does continue to have a pullback um, over the next few weeks, maybe even few months, I'm looking for a support somewhere near around 421 this time instead of 417 like we saw in October. But what concerns me greatly now is the fact that the intermediate band is also chiming in saying, yeah, things don't look so good. And for the buy trend to continue on the monthly time frame on our intermediate band, that means we have to come somewhere near around 296. So let's bring up that intermediate band on this time frame and see what we see. So what has happened is these candles have gotten far too far away from that light blue line that bounces within our intermediate band. So anytime that happens, it's forced to come back down. Last time we saw on our monthly chart, somewhere around January 2022, we went out of bounds and it forced us to come back down. And these X let us know that we were coming back in and they were coming in hot. Well, in January of 2022, it was a little too hot, but it was just enough to push our compass line underneath over the next 2 months, the momentum line on our monthly time frame. And basically, we came in, was still coming in too hot. And because of that, once we reached around 351, 352, we were able to hold that second deviation on our intermediate band, and we were able to bounce. Then once we got up to about 470, once again came in too hot going up, so it had to correct, but we were able to hold our compass line going into October 31st into November 1st. We were able to hold that line and have one more go at it. Long term, this market should have a top somewhere around 560 if it's allowed to get that high. Sometimes it does not make it. But our levels of support that we want to pay attention to closely are at roughly that 438 and 424. So somewhere between 438 and 424 is where we want to see this. So that means that's almost a 20% correction coming in. The bears are definitely telling us a story on the S&P 500. Let's go take a look at the Qs to see if there are any snitches over there. So we see here, so far, the arbitrage band has said that in order for us to get and continue this long trend that we're in, there's support somewhere around 341. Let's go back to our arbitrage band and see what we see on this time frame. Looking at this time frame, same thing. November 1st basically said, nope, psych, we're not going into a bear market. We're going to stay bullish and we're going to continue this rally. While we're once again sitting at the very teeter point, anything past 0.70 on our Z Pro indicator means basically the bears are snitching and saying, hey, we're going to have a pullback. While the Qs are just shy, like 69.25, just shy of that mark, and where it says it has to go is not looking good at all, somewhere around that 341, 344 area. Let me turn on this dash indicator, our odds and automation, so we can see our trend top and trend bottom. So with that being here, we basically see that trend top, trend bottom is saying, hey, for the Qs, it has a top out somewhere near that 438, 444, 436. These are all the time frames just chiming in. And if we were to make a run for it, looks like 440 should be our ultimate timeout if all the time frames can agree. And short term, we have support somewhere near around 425. If we're able to hold that 425 area, then we can continue going up, still trying to push higher. Looking at this on this time frame, we have lots of support, lots of volatility. So let's go down to our weekly time frame to see if we see any closer support. So right around 380, the bears are talking on the weekly time frame saying, hey, 380 is where we are, and 225 is if the long-term trend buckles, it needs to make it all the way down to 225. That is literally almost a 55% haircut from where we currently are. So please, 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 please keep your eye on this market. The bears are here and they might be here for a while. Looking at this, we're going to keep climbing down the scales. We got our daily time frame saying, hey, we want to go down. But once again, if you use our system and have used our system previously, a sell trend cannot happen until the trend bottom makes it underneath the black line. That's the green support line that we have, or support average that's going down right there. And that means we are about to see some volatility in order for us to get a downtrend. These things never just happen. They happen because, well, basically volatility makes them happen. Let's go down to our 30-minute time frames on the Q to basically get a better view. And guess what? On the 30-minute time frame, what about a 99% certainty? It's saying that the top is still at 440 area. And basically, once again, that support is around 425 to 427. Look at these numbers with 95, 97, and 99% certainty using these bands on this time frames within the next 2 to 3 weeks. These should be our tops and these should be our bottoms, or we should be right somewhere in between there. All right. Now that we've seen that, does anything look better for maybe IWM? People have been saying, hey, well, the small caps haven't ran, but the large caps have. That is true. However, the small caps usually follow what the large caps are doing. And if they don't always follow, guess what? Sometimes they lead. So looking at this 30-minute time frame, roughly at about 8:30 on Friday morning, small cap said, no, I've gone up too far, too fast. Valentine's Day was great. We had a buy trend that says, hey, the morning of Valentine's Day from 7 a.m. all the way from 196 all the way until we got to roughly about 203. There was about an $8 run on those small caps, but for the longer term, looks like we are getting some scooping motion, which means we should be heading down. Looking at the arbitrage band, it's definitely in a sell trend. Looking at the novice band, it also is definitely in a sell trend. Anything above 25% from our 25% from our Z Pro indicator means, hey, longer term, we are going down. This is a 30-minute chart, so I'm not sure if you've ever used our windows of opportunity, but with that being said, on the 30-minute chart with these bands that are currently in use, there is a 3 to 12-day correction that could be heading our way sooner rather than later. Let's go take a look at Meta. Meta basically reached the top, got to our trend top on our 30-minute time frame. And this is the one that I usually like to use for this because it gives us the best odds of where it's going to be longer term. So it did get all the way up to about 488, 26, where we got our Z, letting us know that all of our bands on this 30-minute time frame had ran out of room, touched the trend top, and then it started falling down. And from the 15th, about 10:30 Central Standard Time, all the way to where we are now, all it has been doing is selling off. There is literally a $16 to $17 sell-off in that time window. And where is it going? Well, the Bears are once again snitching. That 448 on our 30-minute time frame says, hey, I got to make it there as soon as possible if I actually want to live to see another day. So I'm going to turn on my Apocalypse band on this 30-minute time frame. And where they're heading, these candles are trying to make it to that pink line. So if it does, and if it can, then basically it satisfies the system and can get another ride up like it did previously. But until it makes it to there or close enough to there, things do not look good. I also do not like to see the mean line start to bend and scoop in. Typically, when that happens, that means there's more bad coming than good. So I'm going to bring up my infinity band, which is our biggest band on our system, on a very small time frame. And these candles may try to visit the 414 area in the very near future. So please keep your eye on the ball and don't miss. Just because you want an uptrend doesn't mean one's happening. All right, let's go take a look at Netflix. Netflix tried to recapture its previous high, and I think on this 30-minute time frame, it did not. But let's go say on the 4-hour time frame, I think the high for Meta was somewhere near around that 699 area. So basically, we still have about 115 or so to go, or do we? Look at these bears out in full force. We got dollar signs up here saying, hey, it's over. It's time to go. 624 may have been our top this time. And we got our dollar signs letting us know that we're coming back down. And it wants to satisfy for the novice band to rake it to 562. That means we have to have a little bit of a pullback. We're at 583. So let's go to our novice band, see what we see. And these candles are trying to get to the orange line inside our novice band because it has ran out. It's our relative strength index within this band. So anytime this orange line makes it to the top of the band, the candles try to make a beeline to satisfy it to make sure we do not break our system. And with a 99% certainty, 598 is the absolute top, and 532 should be where support is. So there is about a 15 or so percent correction that could be coming to us in the very near future. Keep your eye on these tech stocks, guys. It's not going to be pretty, and no one wants to talk about it if it's not pretty, except us maybe. All right. Speaking of pretty and speaking of tech, Tesla on the 4-hour time frame has managed to get above the line, and the bulls are actually snitching this time, saying, hey, we need to get back. We need for the sell trend to continue on. We need to get back to 205, and it's trying its darndest to make it there. It's almost there, but not quite. So let's go take a look at our intermediate band to see how close we are to getting there. See, basically these candles, they fell, and when they did fall, they got too far from the blue line. Anytime that happens, and we even almost broke out of 3 standard deviations on our intermediate band on our 4-hour time frame. So we got the Z letting us know that that was the bottom, and now basically those candles are being drawn like a magnet to this blue line, which can't escape the purple band. With that being said, we are watching this guy really closely to see if there will be more good to come for Tesla, because once again, can't get a buy trend until the trend top and the trend bottom gets above that blue line. And so we're kind of hopeful, because this is the first time it has attempted it literally this year. So since we broke under roughly January the 5th, Tesla has been in a free fall from about 247, and this is the first attempt at a new uptrend. So let's see what's going to happen to Tesla. Meanwhile, let's go take a look at Mara. I'm going to talk about this guy. Typically, anytime cryptocurrencies make a run, this guy also mimics and follows. So the fact that Bitcoin actually made it up to 51, 52,000 from a, I want to say 35 to 40, no, 38,000 roughly. So that basically allowed this little bitty stock in a very short period, literally from the 7th of February, to make it from $17 all the way to where we got these Z's, almost up to $31. We almost had a 80 to 90% return. That's if you took the profit when it said leave. If you stayed past your welcome, it may hurt. But there is still a little bit of hope. These guys, because they did top out early, it is saying that we still have top out support somewhere near that $31, $32 range, with several of the time frames saying even $36 may be a possibility. That is a $10 run if you're brave enough or want to play in that arena. Looking at this on a 30-minute time frame, I want to make sure that we don't miss anything. Mara on the 30-minute using the intermediate band, which is the middle of our system, is saying, hey, be careful. We're starting to feel heavy. So it may try to make it back down to that $25 range. And if it does, several of the time frames are saying, hey, $24, $25, that might be a good safe spot for a bounce. And looks like we have support somewhere around 24.88. So that seems more than reasonable, but let's see what happens once it hits that. If it goes quickly, we bounce. If it drifts, we continue our slide down. All right. Since we've been talking about crypto just a little bit, let's go take a look at what's going on with Bitcoin. Bitcoin is still above 51,700 currently at the timing of this recording. And just like with anything, because it's been going sideways so long, and I do not like to see this spooning type motion. If I'm in an uptrend, it can stay basically parallel, but when it starts to crick over, that's not a good look for it at all, because that means there's pressure from the other bands. So looking at this, looking at our top sideways and bottoms indicator, it says that basically 52, 200-ish to 500-ish should be a top for it. And basically on the 30-minute time frame, which basically gives us our 3 to 12-day window, it says that basically if it were to fall, it's trying to build support right around 51,000. So it's stuck in a new channel, but let's see where it goes longer term. Also, those bears, they're snitching again. For the buy trend to make it and make it successfully, it has to get back down to 51,464, or for the apocalypse band, it needs to make it down to 49,435. This is no guarantee that it's going to continue up from there. These are just where the support and resistance lines are saying that we are. So let's go take a look at our apocalypse band to see what we see there. Looking at our apocalypse band on this 30-minute time frame for Bitcoin, those candles are once again too far from the pink line. Pink line is about to exit, if possible. The top of our deflection zone, that means the fact that this purple line, or rather pink line, is in this dark gray area on our apocalypse band, it has no choice. These candles must touch it. So look for either support to form at around 50,000 or break at about 50,000. So keep your eye on the ball. Meanwhile, Ethereum, we're looking at this guy. Anybody snitching? Oh yeah, several time frames snitching. The arbitrage band says on a 30-minute time frame that basically we need to go back and see 2,800. The advanced band and the apocalypse band's like, no, we need to see something more. So basically everybody's stopping. And anytime we see that cross, that means that's the end of the road, folks. Typically, that cross means, hey, for all those people who have been in a sell and we're praying that it doesn't go up any higher, that's your sign that, hey, God's listening. So let's keep on going and take a look at Cardano. Cardano had a nice run. For anyone that may have been in, and basically, I think some people I know specifically picked it up at about 53 cents. You've made at least 10% or so. So you might want to take profit if you are looking at that. It says that basically in order for the buy trend to continue, once again, 56.72 is its place to be. But the arbitrage band on this 30-minute time frame is already starting to begin its sell off with support somewhere near around 57 and top out around 65. Did it actually make it all the way up there? It made it up to 63, 66. So it got quite close, but didn't quite make it. And it looks like it has support somewhere around 55 cents within, like I said, once again, between 3 and 12 days. Shiba Inu, everyone wants to know, hey, more up, more down, where are we going? Well, the candles, because that line is in the dark gray, looks like more down, and it looks like in order for us to continue the buy trend, it has to get back down to that 9560 valuation. So that means it's going to shed at least 10 millionths of cent. Not much, but might be a lot for some. All right. Sol USD. This guy is so much fun to play because he literally goes from, hey, I'm going to be a $30, I'm going to be a $90, I'm going to be a $200 trend. And every time he gets crosses, he goes sideways. He gets crosses, goes sideways. That's the trick to this. If we get crosses and we go sideways, it basically burns off that extra that it went out, allowing more room to form underneath, and the band just keeps on expanding. Well, we went really far out at the end of December, and I think that was roughly about the time that they were talking about that ETF, that Bitcoin ETF coming out. Well, it definitely had gone that far, but now we're in this deflection zone, and it's looking kind of hairy. Sol USD looks like it wants to go back and touch 89.99 to continue its uptrend. So if you're holding the bag right now, might want to take a little bit of profit and see what it's doing roughly around 89.99. Don't give back profit if you don't have to. Looking at our 30-minute time frame, it went up, it went down. So it looks like this guy's been in the sideways motion as well. And looks like the infinity band is also crooking over on this side, on this time frame as well. Yep. So these candles once again have gotten too far from the red line, and because of that, it's trying to make its way down. Also, remember what I told you guys previously, we can't get a downtrend until the trend top and the trend bottom breaks under whichever line is bouncing. So this is our biggest trend, and because of this last run up we have had, our trend bottom has trespassed underneath this red line, which is not going to look good longer term. So please keep your eye out for the next 3 to 12 days to see where we end up. Meanwhile, Dogecoin's hurting and hurdling itself, trying to make sure it stays above 8 cents, but it keeps getting rebuffed because 8.7 is where the infinity band runs out of probability on our 30-minute time frame. And all the way across the board, 8.5, 8.7, 8.8, 8.6 even, it doesn't want to get further above that. But the floor is much lower. So we have 79 as a possibility, 82. 82 looks like support more or less across the board. So it can lose 1/1000th of a penny and still live to fight and talk about it. Now that we've basically cleverly looked at all these cryptos, let's go take a look at the foreign exchange market to see if there are any snitches over there. First, I'm going to start with the US dollar. All right. The dollar has been going up, going down, going up, going down. All of this red. Look at all of this red on the dollar on the 30-minute time frame. It was like, okay, is it going up? Is it going down? Where is it? The compass line hasn't made underneath the apocalypse band on this time frame yet, but things are looking kind of grim. But I will say that the dollar is doing this rather strategically. When it got into the danger zone, it knew it had to slow down, and that slowing down allowed the red line to sneak out of the danger zone, which basically gives it a green light to continue up. Also, probability decided to shrink, which means instead of going for it and falling down, it's like, nope, I'm going to find support, and I'm going to find support above that 103.84 and say, hey, we might be going up even higher. From where we are, we're sitting at 104.27.5 with support from our trend bottoms on each one of these time frames at about 104, 104.12, 104.14, 103.91, and at the quite the lowest looks like about 103.57 and 103.60. So if it breaks under 104.14, know that basically there's another 60 cents that could come out of this. But this is all kinds of twisted because this is a sideways market currently for the dollar, even though it's still in an overall uptrend. It's basically pushing and padding the brakes, making a little bit of an undertow because the bulls and the bears are saying, hey, we want to go around 104, 104.24, 104.38, all in this area. Let's just stay here. Let's just rest and stay calm. Nothing's happening here. Let's see if we can basically stay here, take a breath before trying to make our next move. And this is a good thing because we are above that red line, which means typically if we are resting and we're above the red line, that means there is more dollar and more up for the dollar in the near future. So let's get some confirmations, shall we? Looking at this, trend top, trend bottom, NZD USD. The New Zealand dollar is like, hey, I made it above, and probability expanding. And we saw that trend top made it above, which allowed NZD USD to make a little bit of a run up. But it's looking like that basically 61.35, 61.70, 61.43, 61.35, 35, 35, and 70. So from where we are, there is an artificial ceiling on it somewhere around 61, let's say 45.50, right? And basically underneath it, there's a artificial floor at about 60.80, 60.80, 60.80, 60.80. So 60.80. So right now it's in a tunnel of about a 44 pip channel. And let's see what it does while it's here. Like I said, once again, because it's drifting, that's allowing the red line, which is currently in the bottom of our infinity band, to drift up. That drift up allows for more space underneath. And if it were an actual uptrend, let's see if I can find one of those for you. And an actual uptrend, when we break above the line, we don't just hug it. We try to basically shoot higher. So the fact that it broke over was like, no, not yet. And then it broke over again and it said, no, not yet. It's literally just making room for more room underneath. So keep your eye on this guy. There's a good possibility that New Zealand dollar longer term should still be going down. Looking at this on our 4-hour chart, it tried to make it over the mean line of our infinity band. That's what actually changed the polarity longer term of this trend. But so far, every single time it's tried in February and in January even, the compass line has been nowhere near crossing it. And so we're just teeter-tottering, trying our best to basically just muddle through as we hold this line. Let's see if we get any there. Looking at this, for the sell to succeed, it only has to literally get back down to 61.116. So it means it's not far from there, about 13 pips from where we currently are, just to give us another sell trend. So please be aware of that and make sure you make wise decisions. Looking at this, now the highest percent on our dash indicator is about 83%, and that's from our novice man. And the novice man, if the novice man is in control, there's almost 80 or 90 pips that can be gained from this if it does decide to fall. Looking at AUD USD, it's underneath the line, it's underneath the yellow, and it's underneath the red. So with it being underneath both are saying, hey, 65.51, so there's about 20 more pips up that it can go, and the bulls are talking about that. So if it can basically break above that number, then we get an uptrend, but if not, steady as she goes. We do see that Z Pro on the arbitrage and novice man are both saying, hey, that's possible. But all of its brothers, all those bears are still out there saying, are you sure? Are you sure? So let's continue on. Looking at EUR USD, EUR USD has been selling, and this is a 4-hour chart. It made all the way up to 111 roughly at the very end of December. And from there, all it has been doing is selling. So hopefully some of you guys have been riding the ride. But like I said, typically, anytime the compass line can get over these lines, it's like a rocket, like a scalded cat. It keeps going. So breaking under, as it sneaks under, it looks like this is more or less still a bear market for EUR USD, with that being changeable at 108, 128. So watch out for that on our intermediate band. If it can get to 108, 128, there's a good chance that we can get some more up. But until then, let's keep watching the sell progress. Okay, let's go take a look at the British pound. A lot of turbulence for the British pound. It was underneath, but looks like it's finding support. If the British pound actually, if probability does not increase, which means volatility, if volatility does not increase going into the beginning to middle part of this week, there is a good chance that the British pound will find support right about this 126 area. Notice it has about 125, 125, 125. All these across the board are saying 125 is that magic number. So let's see if it can hold this 125, 126 area and decide to continue its track up. Because guess what? Even though it's been riding this line, and even though looks like 2024 has been all sells, it is still above that red line on our 4-hour time frame and above that yellow line on our 4-hour time frame. So this overall is still a bull market for GBP USD. All right, let's go take a look at JXY. JXY tried really hard, but it was not able to do it. It made it from all the way down here, pushed the red line, but was not able to push over the red line, which means there is a possibility that there is still more down in the very near future. The compass line has been able to, however, if you're watching closely, and guess what? We are. The blue line has been able to get over that momentum line, so there's a possibility that we can get some up here. But in order to get up, we need to recapture this 67.38 and then hold it. And then if we're able to hold that, that's the first mile marker. And then longer term, if we actually want to get an uptrend that will hold, we need to get above 68.52. Getting rebuffed at any of these spots will basically give us more down. So there's about a 200 pip upside from where we currently are, if you're willing to ride the ride, but be very, very careful, because if they can't hold them, more or less, you're buying into more grief. Okay, let's go take a look at NZD JPY and AUD JPY, and then we are out of here. So this guy is giving us a double top. There was a Z on the February the 9th, and there's a dollar sign here. So basically, this is looking like that we are out of room for NZD JPY, and these numbers look okay, I guess. It needs to break on the 91.45 to give us a sell trend on our arbitrage band. It needs to break under 89.92 to give us a sell trend on our apocalypse band, which is our longer term time frame or our bigger band on this time frame. It's looking like, though, there's lots of support near that 91 area. So all the time frames are chiming in and saying, hey, 91 20 something is where we want to stay. So if it's able to stay above that, we stay in the buy trend. If it breaks under that, let the selling begin. So from where we are, that's about a 60 or so pip move, and the JPY pairs move quite liberally, so it's more than possible. AUD JPY also trying to shoot the works, and looks like it has support right around 97.57, 97.96, 97.78, 97.44, 97.46, 97. So right about 97. So that's literally about $1 from where we currently are, if it decides to fall. And if it does decide to fall, that's a lot of support there, so I'm pretty sure it will hold. But counter to that, there's a lot of resistance at about 98, as you see here. Nothing much above this from the 4-hour time frame going down. So this may actually be the top, and the bears may be snitching on us once again, letting us know that, hey, we got to go here, and longer term, we got to go here. So keep your eye on the ball, and thank you guys for joining us. We will see you next time. Bye-bye.